20-minute or so interview with Abdulaziz bin Salman, who is the Saudi energy minister as well. So that was a welcome treat. Long-ranging interview. Try to get the whole thing up if we can on CNBC.com for you. But really the point that he was hammering at the beginning was that this deal for a cut is larger than the market believes it is. Obviously, the headline number that everybody's talking about is that OPEC Plus, after 4 days of tense negotiations, cut 9.7 million barrels a day. But His Highness's view is that basically, no, it's higher than that because, remember, production was elevated at the beginning of April. So he told us that the cut was actually closer to 12.5 million barrels a day. Listen to a clip.
The number is way much bigger. It's 12.5 million barrels. My calculus is as follows. The 9.7 is true. We are doing 1.3 to bring us back to the 8.5. The UAE, this is as a result of our high production in April. The UAE is also coming by about 1 million. And I believe Kuwait is made also another announcement of they're coming down by about 500,000 more than what they were doing.
So, Kelly, he's saying there's a lot of math there. 12.5 million from OPEC Plus from the highest production numbers. He also added later on in the interview that he thought the G20, which includes the United States, of course, I'll call them the bank nations, Brazil, America, Norway, and China, and Canada, could do more than the 3.7 sort of that they're semi-promising. He thought we could get to 18 or 19 million barrels a day when all is said and done.
Wow. So, Brian, the president continues to say that he thinks it's more like 20. What do you think that's based on? I mean, if we're at 12.5 from the highs, according to Saudi, could add a few more million barrels a day, like you said. But do all eyes turn to Texas now, to the American producers?
They do. And I asked him about the president's tweets, by the way, in this interview. I said, can we get the 20? And, he didn't want to obviously correct or not correct President Trump. But he said, listen, if we go 12.5 million for OPEC Plus, 3.7 million for G20, they do a few million more through natural declines. Maybe to your point, this Texas Rail Commission, they're going to impose production quotas on April 21st. We don't know, but they could. He's not saying we're getting to 20 million, but he made the case with me that we could get to 19 plus, assuming everybody went big. He also wanted to send out a message to U.S. shale, which hopefully we'll get more of the interview up very soon, that this was not an attack on U.S. shale. He's very adamant about that, Kelly. He said this is not an attack on U.S. shale. This was unfortunate timing of a disagreement between Russia and Saudis, back on March 6th when they sort of split and the price war sort of began. They're not looking for the collapse of the U.S. shale market. He made those points very strongly with me in the interview as well. We'll hopefully do more later on today, and we're trying to get the whole thing up on CNBC.com later on today.
Brian,
so, Kelly, there's our interview with bin Salman.
Right, and on the other side of this, real quickly, Russia is on the wire saying a total global oil output cuts of 15 to 20 million barrels a day in the May-June timeframe is likely. So add all of this in. My question is, why isn't oil up more today?
Well, first off, if we get to 20 million, it's going to surprise a lot of people. You might see oil move. Right now, we're nowhere near there. Remember, this doesn't take place until May 1st. Also, Kelly, a lot of people are out there with dire predictions about demand over the next couple of months. How long is this going to last? I think that's the reason. Oil had a little move on this initial news a couple of days ago. I think there was your rally.
Yeah.
Could we get to 20 million? Maybe, but hey, Kelly, if production is down by 35 million, it's still a pretty dire situation, but it's not nothing. Anyway, like I said, we'll try to get more of that interview up later on through the day.
No, it's great stuff. Brian, thank you. We really appreciate it.